Hello, people. Another episode of The World is Burning. I don't know how we did it, but we've managed to get 300 subscribers, so shout out to all you people. If you also want to watch the economic world burn, give us a sub and we can watch that together. Yeah, this channel we're just following the economic crises and looking at some of the potential crashes coming in 2024. This is a big one that we're going to look at today, the commercial real estate crisis. Big banks, US banks could get slammed with another 160 billion in losses as commercial real estate faces its biggest crash since 2008. This is going to be a big one, guys. They've got a lot of finance that they finance these buildings on, very low interest rates. They're coming, they have to refinance them this year, and guess what? They're going to get hit but with these high interest rates, and the banks are going to take on these losses. US banks prepare for losses in a rush for commercial property exit. It's happening, guys. They're trying to offload this debt and they're doing some absolutely wild things. Look at this. A Chicago office tower sells at a massive discount. Look at this in downtown Chicago. Okay. It's a 12-story building in the business district. They paid $4 million for it. Okay. Yeah. It was only in 2012 they paid 51 million for this property. So they've just taken a ridiculous haircut. The bank. They're just trying to get out of these buildings. They know how bad it's coming. They're just trying to get some money. We even saw it in San Francisco. The Westfield Mall, one of the largest malls in America, I believe. They just handed the keys back to the bank because they can't keep paying for their they just can't keep paying the bills.
Maybe there's a big storm brewing in commercial real estate and the next domino is about to fall. Sound the alarm on what could lead to a major blow off top in commercial real estate and the crippling effects that could have on our economy as a whole.
This is what I'm saying, guys. It's all interconnected. If one of these, if the student loans, if the credit card debt, if the commercial real estate falls, it's also connected. It's going to have a knock-on effect, causing issues around the globe.
When a blow off top in commercial real estate happens, it can not only lead to a widespread loss of confidence in the market and a decrease in investment activity, it can also have a ripple effect on the much broader economy, particularly if it leads to a wave of defaults on commercial real estate loans and a decline in lending activity, all of which we are seeing the beginning signs of right now. So the $1 trillion question is this: could the mounting distress and increased risk of defaults and delinquencies cause banks and financial institutions to fail, similar to what happened during the Great Financial?
And here's the thing, guys. I know we all say we hate the banks and stuff like that. We actually want them to work and function normally. And yeah, they're going to scam. They'll always scam, but we don't want them to fail, because when they fail, they just get bailed out with your tax money. Then your taxes go up. You end up paying for it anyway. They never lose in the end. They never lose in the end.
Crisis. Well, the simple answer is
You love seeing Blackstone and other real estate investment trusts lose money. You're going to love this.
Yeah, guys, it's like what I just said about the like this. Look at this comment here by Sarah. BlackRock will get a taxpayer bailout. Yes, they will. They 100% will. It'll never be them losing in the end. So yeah, we don't want to see these big companies, losing. We just don't want to see them losing. Even though I know it sounds crazy to say that, because we get fucked in the end, people.
To this and many other articles this week, Blackstone officially sold off an Orange County office tower that they owned for a 36% loss. And yeah, we're talking about millions of dollars. They bought this place way back.
And guys, sorry to keep pausing this all the time. They'll be able to do these as tax write-offs, and they'll have there'll be a reason that they're letting this stuff go for so cheap. It'll come out later on. It'll come out later on down the line, like it always does.
2014 for 129 million, and they just sold it. They just closed for 82 million dollars. That's a 36% loss. And you can tell that Blackstone is in trouble. They're limiting their investors' ability to access their invested money in their real estate investment trust, as you can see by this article right here, that they've been blocking that all the way since back in November. Just like the banks, they're worried that everybody makes a run for their investments in their business. They're going to be upside down and they're going to go bust. You have to remember that these companies bought tens, maybe even hundreds of thousands of residential homes here in the US. So to see them lose money, especially on this type of scale, really only brings me joy. This is just the
Yeah, it'll bite you in the ass, brother. It'll bite you in the ass, because you're gonna be paying for it in the end, like you always do. Yeah, and these are the companies who were purchasing way, way, way above asking price in cash, and they actually kind of destroyed the American housing market during the pandemic. So yeah, they're just scummy companies all around.
If you talk to the commercial real estate guys, they'll tell you that the situation is dire. There's two problems.
Yep.
First, there's a credit crunch going on. So
Yep.
there's just no credit available. If you're a commercial real estate developer and you have a building and you want to refinance your construction loan or put long-term debt on a building, you just can't do it. The banks are not open for business. They literally don't want the business. And I think that comes back to the fact that banks right now are hunkered down in a defensive posture. They're seeing deposits flee from their banks.
Does that freeze on the banks predate the Silicon Valley bank crisis and it was exacerbated? Were people having a hard time getting loans before that?
It predates it, but definitely what you saw with SVB and these other banks, including Credit Suisse, is that banks now are getting much more paranoid.
Yeah, and when the banks aren't eager to lend out money, you know there's an issue going on. So yeah, leave me a comment, guys. Really want to hear what your thoughts on this whole commercial real estate nightmare is.
So my anticipation is we're going to see a lot more bank failures over the next year or two. You'll continue to see it in the news, which we're saying. And what you want to do about that, which is maybe the most important thing, is number one, if you have commercial real estate that you're investing in, think about ways that you can control any interest rate risk you have. For those of you out there who don't own commercial real estate, one of the features of commercial real estate is that interest rates reset periodically, typically every 5 years or so. And so if you're coming up for an interest rate reset, if you have a mortgage today at 4.5% or 5%, it may go up to 9 or 10%.
And here's the thing, guys. If it's your personal house and you have a 200 grand mortgage and it goes from 3% to 8%, yeah, that's going to sting. Yeah, that's going to hurt you. But these banks with these commercial real estate deals, we're talking about 500 million. We're talking about 700 million. So if it goes up even 1% on that, it's such a high bill that they have to foot.
If you can't make those payments, then your lender is going to foreclose. So if you're in that position, you have to start thinking about, should you sell the property?
Shout out Bob Diamond.
Will the housing market crash affect commercial real estate? Absolutely it will.
Yep, 100%, guys. They're all connected. Remember that. They are all connected.
Look at this chart from 2008 during the Great Financial Crisis, where you can see that commercial real estate, while it did take a little bit longer to catch up to the trouble that residential real estate was facing, did experience a pretty significant downturn. So if you're looking for a buying opportunity, the next 12 to 24 months could be the best time to buy commercial properties.
There's going to be a discount, guys. There's going to be a big fire sale and there's going to be a discount. The only problem is some of these properties, because it's commercial, it's just more expensive. And I don't think people have the money to buy it right now. But if you are in a position, you got some cash, you could get yourself a deal of a lifetime in the next 12 to 24 months. I'm glad this guy needs to follow The World is Burning, because I've been saying the next 12 to 24 months as well.
Housing crash. Canada. Is it imminent? Let's look at this. Based on an economic study by Desjardins, if we have the worst, and I mean worst, recession since the 1990s, and we have a construction boom that we haven't seen in decades, we will only see a 30% reduction in home prices across Canada.
I love dreaming. Dreaming gives me hope. And if I hope to live in Toronto or Vancouver, that hope is finished after I read Desjardins' article. Even if we had the worst recession.
Yeah, shout out to my Canadian followers. Leave me a comment. What's it like in Canada right now? I haven't heard from you guys in a little while. I've heard it's rough.
You have ever seen in Canada. There's no hope in hell that you will be able to enter Toronto or Vancouver's market unless you already live in those cities.
I already know it in the comment section. I'm going to hear that I already live in this city, so I got it made with all these expensive prices. Well, I'm going to warn you that this is actually a terrible thing, because the brain of our country are our youth, and our youth are leaving these two cities at record amounts for provinces that are more affordable. In the long run, this is going to be a massive problem. I'm a numbers guy, and I love this kind of stuff. What if the worst does happen? In Vancouver, the average price of a home is $1.25 million.
Like, that's insane. The average cost of a home is $1.25 million. Just put that into perspective, guys. Who the hell can afford one of them? Who can even afford that? Look here in the comments. We already have a 30% drop in Southern Ontario and still dropping. Peaches. Not just about rates. People can't afford $1 million homes. They have to come down. Exactly. That's what I'm saying. Who the hell can afford one of them?
2008, there was a housing crash and a stock market crash that was primarily driven by the subprime mortgage market. And what that meant was lenders were giving out loans to people with low credit and a really high rate of defaulting, so risky borrowers. And then they would get in with these adjustable interest rates that gave them low monthly payments at the beginning, and then after a few years, the interest rates would rise. If you watch The Big Short, this is what it was all about. These financial firms took these subprime loans and sold them in pools of mortgages known as mortgage-backed securities to these big commercial investors. And what happened when these adjustable interest rates started rising is people started defaulting at a crazy rate, which then crushed the stock market, did the same thing to real estate, and put us in the GFC or the Great Recession.
Yep, summed it up quite nicely. Shout out Crystal here. Yep, that is what happened, and I lost my beautiful house. There's so many of these people, these stories where they got absolutely wrecked in that 08. And unfortunately, we're going to have a lot of people getting wrecked in the 2024 crash.
The epic real estate crash has already started. There are 3 billionaires that are set to make huge money from this. The first is Larry Fink from BlackRock. Let me show you this concerning report that they released. A little pixelated, but I'll sum it up. Basically, they're going to take their $9 trillion under management and move it outside of the US. They don't think that the US is going to have a sustainable economy next year. Say we're out of the fire and into the frying pan. I think that commercial real estate is going to implode. They said there's going to be a big structural shift, and it's going to cause problems for the US in the long term. And WeWork is a good example of the commercial real estate implosion. They think that they might go bankrupt soon. Warren Buffett and his billionaire partner, Charlie Munger, just also made almost $1 billion bet on the housing market. They actually think the housing market is going to get better, but not in the near future. They just spent about $700 to $800 million to buy shares of new home builders. As you can see, in the last couple of years since 2019, new home builders are crushing it in returns with the S&P 500 index way below.
Yep.
Big real estate crash is
Yep, guys. So we're seeing big moves happen, even the stocks for these house builders, because they know that the inventory is low, is shooting through the roof, and then you get these smart guys like Charlie Munger, who's rest in peace, and Warren Buffett, who know exactly what's going on, and they bought in ages ago. They all these people who are running things know exactly what's going on. We'll do one more and we'll get out.
I just saw the Altos market data on Phoenix and Arizona, and all I can tell you is we are in a full-on crash in that state. The next 6 months are going to be so ugly. Like and follow for more information.
God, we can't leave it on such a depressing one, but it's, Arizona's not safe.
You think real estate prices will drop in 2022? Yep, don't you? Heck no. Do you not see we have no supply in the real estate market? This is true for now, but have you considered these 3 points? First, we're at a new all-time high of new homes being built. You're saying more new homes will be built this year than in the 2008 financial crisis? Yep, and second, the Federal Reserve is raising interest rates to fight inflation. Historically speaking, whenever you raise interest rates, that decreases housing prices. Okay, yeah, we can agree on that. And third, this is just my opinion. We are on the verge of a recession here in America. And unfortunately, recessions cause layoffs. When people don't have jobs to pay for their house, they either have to sell it or foreclose on it. So based on the data that I see today, I think we could have a surge of homes towards the end of 2022. A surge of homes increasing the supply, with interest rates going up, will be dropping prices like crazy. So if you're interested in real estate investing, 2022 might be your year. Follow for more.
Yeah, we'll leave it there, guys. We'll leave it with this comment. No one can predict any economic recession. This is because the Federal Reserve manipulates the market. Yes, they do. Yes, they do. So yeah, leave me a comment, guys. How do you think this is going to pan out? This whole commercial real estate nightmare is coming ahead, and it's going to be a legitimate nightmare for a lot of companies and a lot of people. And unfortunately, we always foot the bill for these issues. Leave me the comments, and yeah, give us a follow if you want to watch the world burn with me. Bye.